Good morning, everybody. Hey, welcome to Thursday. It is October 12th. Hey, we got a couple earnings we talked about yesterday. Domino's reported as well as Delta Airline, two Ds today. And we'll talk about that more when Dave joins us here in just a few seconds. Before we do that, though, let's not forget that there are certain things in this world that we can control, and there's a lot of things in this world we can't control. So let's take advantage of the things we can control. And one of them is the amount of risk you have in your current portfolio. What is it? How much do you have in your portfolio? Do you really know what the risk is in your portfolio? Do you know how much risk you should have in your portfolio? Folks, this is why we designed the Core Retirement Design to help you analyze, protect, and be ready for these ups and downs in the market. Give us a call, 863-382-0037. Schedule your core retirement analysis. With that, we've got Dave up next.
5.7 Light FM. Girls just want to have fun. Of course, they'd kind of like a raise in their Social Security, too, which you're going to get. We'll tell you right now, because it's time to check in on your money and see what's going on Wall Street. Phillip Statler from Statler Financial Services, as usual, is on the phone with it. Phillip, good morning. Us old geezers are rejoicing. We get a raise this year, don't we?
Yeah, you're going to get a little bit of a raise, not as much as last year, but hey, something's better than nothing, right?
No kidding. Yeah, 3.2%, the official Social Security cost of living increase this year. That's quite a decrease from the 8.7% us geezers got last year. But when you mentioned that and we talked about it before we went on the air, I said, hey, I'll take a 12% raise across 2 years. That doesn't sound too bad when you smooth it out over 2 years, does it?
No, it doesn't. I mean, 6% a year, that sounds pretty good, doesn't it?
I got a few wage earners that wouldn't mind seeing that. Of course, we do need to make note of the fact that 3.2% increase gets held up against the consumer price index that came out this morning, and it was a bit of a disappointment. We expected it to go down to 3.6% for consumer inflation across the year. We're at 3.7% inflation, so my fellow geezers, I'm sorry, guys, we're losing ground by a little bit, aren't we?
Yeah, we are. And that's, month over month, it's going the right direction, but year over year, not so much. And, that number, the Fed really wants that number 2.5%, 2%. So it's, it doesn't look like it's a long way to go, but that's a long way in terms of inflation.
Yeah, you kind of hold that number. A little bit of a disappointment up this morning up against the open market committee meeting notes that came out yesterday afternoon at 2 p.m. And virtually it was a consensus for all intents and purposes from the governors at the last meeting that it was going to take another quarter-point rate hike in order to do the job they needed to do. I'd be, at this point in time, I'd be tempted to say it's a fait accompli in November that we're going to see another quarter-point interest rate increase. Wouldn't you agree?
I think so. With the numbers that we're seeing come across the board, I just think it will be, pretty much a no-brainer that they're going to, whack us across the head again with another rate increase.
Yep. It was kind of interesting, the reaction yesterday. I mean, I do watch the daily charts. I was looking for anything detailed from the Open Market Committee, and basically all I was able to find is that it was essentially a consensus. But it was a herky-jerky day on Wall Street yesterday. We started out modestly up, and then during the process of the day, we lost about 400 points from our peak until just before 2 p.m., and then the minutes came out, and we rose back up, and we ended up with a relatively green day, modest anyway. The Dow was up 66, the S&P was up by 19, and NASDAQ was up by 97, given the fact that they basically telegraphed that, like you said, it's a no-brainer. They're going to raise interest rates. I was surprised we went up after those minutes came out, weren't you?
Yeah, I was too. I thought that we would have ended up giving back some more based on just the whole idea that interest rates are going to go up. But, it's the markets can be fickle sometimes.
It certainly can. Some of it, I think, kind of addresses the notion that you and I preach until we're blue in the face. The market can handle bad news. The market loves good news. One thing the market can't handle is uncertainty. And between the open market committee meeting minutes yesterday plus the inflation rate today, it's pretty doggone certain we know what's going to happen in November with the Federal Reserve. And it kind of seems to be reflected in the federal bond yields, because we saw them going up. Now all of a sudden they're going back down a little bit this morning, as investors are saying, well, okay, fine, move a little bit of money in, or rather they're going up this morning and down. I'm talking about the base price. Investors appear to be taking their money out where they park them in bonds, and now we're putting them back into equities, just readjusting their portfolios to reflect what they expect to happen with interest rates.
Yeah, Fed, Powell said what, one more hike and then higher interest rates for some time to come. No definition of what that means.
Yeah, but they pretty much took a reduction off the table on their last meeting with the statement after the meeting. And like I said, expect the high mortgage rates and high interest rates to last for a little while. Guys with CDs are happy, but folks looking to buy a home are not impressed. Other numbers out of the government this morning: the core number on the consumer price index gets rid of the volatile stuff like energy and food. It came in exactly as expected, 4.1%, a little bit lower than last month, but no great shakes. But it was what they expected in the process. And we kind of back it up with the first-time unemployment claims. They expected them to go up by about 7,000. They went up by a little bit, but nowhere near as much as expected. 209,000 first-time jobless claims last week, which is still a sign of a very healthily functioning employment economy.
Yeah, it really is, and we talked about that Social Security number. The one thing that they haven't announced yet, and I don't know exactly when this gets announced, is but what the new Medicare Part B premium is going to be, to see how much it's going to eat up that raise that folks get in their Social Security.
Exactly. We got a drop in the Medicare premium last year after a prepaid program got its reserve built up to the point where they didn't need it anymore. So Medicare Part B premium has actually dropped a little bit last year. I think you got to be smoking something funny to believe that's going to happen 2 years in a row.
Yeah, I agree. That's not the norm for sure.
Yeah, the question is how much of my 3.2% raise goes up with insurance premiums and goes up in smoke. That's the question. We are starting to get into our earnings season with some big household names starting to report. Before we even get to the report, so it needs to be noted that labor issues continue. Ford and the United Auto Workers are decidedly not getting along. First thing that happens is they whack the Canadian plants the other day. Now all of a sudden the UAW says, let's just go after their core business, the stuff they sell so well, and we're going to whack the SUV plants, I gather.
Yeah, they actually are now striking. They weren't before, but they are now striking. They've expanded to the SUV and pickup truck facility in Kentucky, which is the largest facility by both revenue and workforce in the company. So that's not good for Ford, and they are getting whacked pretty good, down 2.2% today.
I can believe that. Yeah, the environmentalists probably have a hissy over this fact, but the fact of the matter is we aren't buying the electric cars half as fast as they'd like us to. And the big movers for Ford are, it's still the Bronco and the F-150, 250, whatever lines. So you take away their big cash cow, and that might just hurt enough to make one of the automakers move a little bit.
Yeah, it's definitely going to see what. It'll be interesting to see how much longer they can hold on and how much closer they can get to each other before they can strike a deal.
Absolutely, and Ford, the aggressive request the union is making. If I were on their side of the fence, I'd probably be cheering for them. But looking at it in a vacuum, I'm saying, okay, I'm sorry, 30% wage hikes. I'd take it too, but it just does not sound like something the automakers are going to be able to swallow with any degree of ease.
No,
big names.
I was just going to say, it's got to be something they can pass on in the cost of the vehicle. And that kind of increase, you just can't pass on and put in the price of the vehicle and expect to sell them.
Oh, yeah. how'd you like a 70,000 F-150? I like my little compact car for that reason. Delta Airlines kind of leads our list of household names that reported this morning. How'd they do anyway?
Delta had a good quarter, Dave. They beat the expectations. Earnings came in at $2.03 a share versus $1.95 expected. And actually, so here's, we talk about beating expectations, and that's what's driving stock prices. It's the year over year that we really need to be looking at. And Delta had a 60% increase year over year in their earnings per share compared to the same quarter or a year earlier. So a big jump for them. Strong travel demand they still see coming into the fourth quarter. Now, they did make some adjustments, though, because fuel costs are going up. So they have adjusted some of their numbers for their year over year numbers. So they originally thought that they would hit the year between $6 and $7 a share for earnings. Now they've adjusted that number. The bottom number is the same, but they feel like the best they're going to do is 6.25. So they've lowered that expectation, as well as their free cash flow dropped by $1 billion from $3 billion to $2 billion. So they're feeling some crunches in there with cost of fuel right now.
I guess I'm not surprised by a good quarter just based upon the last flight I took about a month ago, and wow, I had full flights with waiting lists in line for both of the legs of my trip back up to Wisconsin. It was just wow. Yep. We're still flying. We may be tight on money at times, but by gosh, we're blowing it on vacations. That's for sure.
We really
Let's go on the other end of the fence. Money in my dollars in my pocket type expenditures. How did Domino's Pizza do?
The Domino's Pizza, they had a mixed third quarter. Their earnings came in above what was expected. Their revenue was a little less than what was expected, though. And so they are trading down about 2.2%. And I guess I didn't realize they're a pretty expensive stock, Dave. They're trading at $346 right now.
You can buy 30 pizzas for one share of stock.
Yeah. So
I wonder what the option plan is like for their managers. I didn't realize they were that expensive either. Talking about labor issues with the car dealers, I know Walgreens is getting struck by some of their pharmaceutical workers, especially out on the West Coast. Did they have anything to say on their report? I know they reported this morning too.
They did. They had a miss on earnings for the fourth quarter, and it's related to COVID. They're seeing a lot less demand for COVID vaccines and even for COVID tests. So, and then they gave soft guidance for profits for the full year. So we're going to continue to see them struggle. And they had a little shakeup too, I think, in the C-suite. So they were down earlier this morning, like 3%, but that drop must have got people excited because they bounced back up. They're up 1.3% right now.
There are bottom fishers just about any place. Tomorrow we get the real flood. You with Doug are going to be able to talking about the big financials starting. So earnings season's teeth will really start showing tomorrow, right?
That's right. Yep, we got the banks coming in tomorrow.
I gotcha. Resetting the table, it was a modest up day yesterday, although it sure didn't look like it about the middle of the day. We recovered to generally green ink through the bunch. 45 minutes before we opened this morning after not what we wanted to hear on inflation. What are we looking at this morning?
Hey, Dave, we still got some green ink, man, across the board. We got the Dow 30 up almost 0.3%. The S&P 500's up not a little less than 0.25%, and the NASDAQ 100 up almost 0.2% right now. So big winner right now, though, is the Russell 2000 up a little over 0.33% this morning. On the other side, we've got silver up about 0.5%. Gold is up 0.25%, and crude oil is significantly, well, I won't say significantly, but less than what it was yesterday. So it must have had a really down day yesterday, but it's up 1.6% this morning, $84.81 a barrel right now.
But still under 85. Yeah, it must have really taken a bath yesterday. Overseas markets, everybody pretty much looked at our reaction to stuff, and they aren't unhappy at all so far. The Asian Rim following our yesterday trading, everything was uniformly up. The Hong Kong market was up by almost 2% this morning. Overall, the Asian index up by, let's call it about 0.5% overall. Europe is looking at us and saying, okay, they look like they're able to cope with an inflation issue, so they're evenly up as well. The overall market in Europe and the index is up by about 0.5% as well, halfway through their day. Planning ahead, well, the big time investors can park things in bonds for a day and then go back into the market when they know what's happening. Those of us in the common folk of the world can't do that with our IRAs. It takes managing risk. How do I find you to get that risk managed on my plan?
Dave, what we said earlier, the markets can be fickle. That's where folks can take control by controlling the amount of risk they have in their current portfolio. And that's why we developed the core retirement design to help people identify that risk and know what it should be based on their current circumstances. Give us a call at 863-382-0037 to schedule your core retirement analysis, and then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And you're going to be here with Doug tomorrow morning to fill us in as to the financials coming out during earnings season and all this other stuff to affect our money. I will see you on Monday. Fair enough?
All right, buddy. Hit them straight down the golf course.
We're going to try. I'm just praying it doesn't rain on us. You have a good day.
All right.
Thanks. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Remember that first paper?
Hey, folks, again, I want to thank you for joining us today. Hey, if I can help in any way, please don't hesitate. Give us a call, 863-382-0037. Until tomorrow, have a great day.